Hi, Jay. Welcome to Venture with Grace. We're live.
Great. Hi, Grace. How are you?
I'm good. I'm sorry about the drama, like the
No,
literally
no
login
drama.
drama every day. Logging in is a challenge. But anyway, okay, so we're talking about CS. Maybe we start there. So obviously GFT is very involved in like advanced technology or like emerging technology, especially AI and blockchain. And it's global frontier
Yeah,
technology.
yeah,
So I wonder when you are thinking about maybe we start with CS, like, what are some new observations? Obviously, I feel like um there are a lot of like technologies in everything we do in the world, but like maybe we could start with like what are some of your thought on CS?
yeah, sure. So I've been doing CES now for over 20 years. My first
Oh
CES,
wow.
I believe, was back in 2004,
Hmm.
after I joined Samsung Ventures in 2003.
Hmm.
And so, it's been, you know, quite a long journey. It's something that, you look forward to at the beginning of the year.
Hmm.
Partly look forward to. The other part is, it's going to be pretty tiring because there's so many
Hmm.
events going on at the same time. But
Hmm.
it's always great to meet people, right, and share perspectives. I think the thing about CES is, in terms of what CS is really all about, I think a big part of it is really the network, meeting
Hmm.
people, catching up. The second thing is really the exhibits. But the exhibits really are shown on the outside, and
Hmm.
it's very difficult when you're walking the floors at CS to know of the progress that's happening under the covers. Meaning, for example, the big theme around tech, as we all know, is artificial intelligence. And the devices and vehicles and whatnot that are on show at
Hmm.
CES, you can't really see how smarter they've gotten
Hmm.
necessarily, unless you really participate in one of those hands-on demos and really kind of pay attention to what's under the covers. And I think that's actually a big change for this year,
Hmm. Hmm.
um, for this year's CES. A lot of the consumer electronics and the automotive um, vehicles have really, in many ways, have aggressively adopted artificial intelligence to make the entire user experience much more smarter. But that's something that unless you actually go through a user interface, you
Hmm.
wouldn't be able to find out.
Mm. What would you say? I feel like everything's AI these days. Like, you can't really tell like what is implemented, what is not. Sometimes, like, besides, like, it's getting more tailored towards your personal data and opinions. I feel like one of the observation was actually like speaking of, your track record, like you were at Samsung Ventures. I stopped by the Samsung booth. I feel like a lot of their technology were seemingly very useful. So like, from you can from your glucose tracker to connect to your fridge that connected to your oven that's connected to, basically you can like from having your data to they suggest you what to eat, what to grocery shop, and then
Yeah,
how to cook the food. I feel like a lot of stuff were really useful. But I wonder, from an investment perspective, since like, you guys invest in AI and frontier technologies in general, like how do you walk through the room, like, what were behind your mind when you're like, and then what are you looking for, since you went for like the past like 20 years? That was my first CS, so I don't really have comparisons. But I guess like in each year, like, were you looking for different things, and then is there something that you find surprising this year?
yeah. No, since you brought up Samsung, let's talk about Samsung. I think
Mhm.
Samsung over the last 20 years that I've visited, they've typically tried to wow people with, the largest screen TVs or the
Mhm.
cutting edge, form factor designs and whatnot.
Mhm.
And they've done a really good job about it. I thought it was interesting this year. I kind of felt that they almost um, made it less obvious in
Flashy,
terms of
yeah.
trying to wow people
Mhm.
with the actual devices, but more really share with the audience the user experience, as I mentioned earlier, about how all these connected devices now utilizing artificial intelligence on the back end can really create a far more superior user experience, right?
Mhm.
And I thought actually it was more subtle, but actually
Mhm.
more interesting for me because all the different aspects of how all these devices can work together, leverage your data, and then provide that kind of personalized, intimate experience, I thought was very interesting compared to
Mhm.
what they have been doing in prior years. So I think that was
Mhm.
one point. And again, from our perspective, trying to understand what's happening under the covers
Mhm.
was really interesting. And seeing Samsung kind of demonstrate that in various different use cases was refreshing. It's
Mhm.
interesting that Samsung actually got some criticism that I read about, especially in the Korean press, where their traditional rival LG had still gone all out and had a lot of wow factor. The stained glass panels, for example, and the
Mhm.
moving kind of, you know, um, large screen displays. But for me, actually, it was more interesting to understand kind of the artificial intelligence being embedded across the board. And what I look for is I try to look for kind of emerging trends. And if you look for emerging trends, it's less about going to the convention center. It's more about going to Eureka Park, where a lot of the
Mhm.
startups are displaying and presenting. And the amount of energy that you see from those startups presenting in the Venetian Expo in
Mhm.
Eureka Park was quite impressive. And what I noticed was there were a lot of AI and robotics related, but there was still a
Mhm.
fair amount of diversity around healthcare devices, personalized devices, as well as energy, battery technology, and whatnot. That all were pretty impressive. And personally, for me, working with early stage startups, I get more energy actually walking around Eureka Park than anywhere else.
I feel you. I completely agree with you. But I feel like walking through the Venetian, I kind of like just noticed three type of technologies there. It's like the robotics, um, basically the robots that cleans your pool, your
Mm.
wall, your floor, like you mentioned, like, Rumble, I think it's called Rumble. Like, so the little bot that cleans your floor, that's kind of like a 20-year ago invention, but obviously that's still here at CS. I feel like that's one of the observation.
Yeah.
The other part is like the pad technology is going insane. Like there is like, you can monitor the bird that flies into your home and like your pet's like facial expression. A lot of like the pets management, it's a lot of them. And then like there's the third one, it's like maybe the ring or like watch or like glasses, so like anything wearable. um but I thought it was really interesting that like as you mentioned, like the healthcare devices or something that's like maybe help, like, I saw like the elderly tax section. It's like almost like no one there, or like, it's always like the more fanciest like pad devices. And like on the other hand, when you go to the large corporation uh area, I feel like I noticed that it's just like, anything fancy, like you hung like a car onto the wall, or like, flying boats. I'm like literally, I don't understand the concept of flying boats. Like no, like actually no shade on the technology. I don't understand, like if you want to fly, shouldn't you have a plane? Should that be called a plane? Why is there a boat that's like flying above the water? Like, I don't really know. Are they gonna actually go into the water at some point, or like is it just like flying? Because I don't understand the concept. But a lot of the technology, I personally felt like it was actually, I'm not sure if I will ever be like used. And like I heard that like 30% of the CS technologies are actually never make it to the world. And just out of curiosity on like, how do you think about the go to market perspective? Or were you looking for a particular type of technology versus like were you looking for some sort of commercialized stuff that could actually be going public? Since yeah.
Yeah. It's a good question, and it's very interesting. I think you're right about the percentage of products that never actually make it to the market,
Mhm.
because you have to understand CES is a show, right? Consumer
Yeah.
electronics show.
Mhm.
And a big part of it is to show off what these, especially the larger companies, can actually do. And so wow factor really matters a lot. Now, a lot of these wow factor products, let's take, a massive 100-inch TV screen.
Mhm.
If you think about it from a business perspective and a practical, how many people will actually purchase, one of those,
Mhm.
$30,000 100-inch screen OLED TVs? Very few,
Mhm.
right? From a business sense, it may not make sense to naturally push on that product and launch that product, but it looks great in a consumer electronics show,
Mhm.
right? And so a lot of these demonstrations and a lot of the concepts that are shown on the floor is really to show off, this is something that we can do from a technology perspective, but then it's a completely different matter to whether or not it makes sense from a business perspective.
Mhm.
Because unless there's a mass market, typically,
Mhm.
then it just doesn't make sense for certain products to be able to push on them. On the other hand, if you think about what startups are trying to do, go to market is critical for them for their own survival, right? So I think a lot of their exhibitions and demonstrations are frankly far more practical
Mhm.
because they are specifically leading into their go-to-market strategies and what they actually want to launch. Now, again, we all know that many of these startups won't actually be able to be successful, but at
Mhm.
least what they're trying to show at their CES in the Venetian Expo is far more practical, and they're trying to push on those to literally go to market. So I
Mm.
think there's a big difference there.
Mm. What would you say are, I guess, like when it comes to investing? So maybe we could start talking about, you know, GFT
Mhm.
ventures. So like you and your co-founder, you were at Samsung Corporate Venture, and your co-founder were at NVIDIA Corporate Ventures.
Right.
Maybe we could talk about like, how do you use those different lens to apply into filter out the technology that can actually have legs, and how do you kind of diligence like different type of companies in the emerging tech space? Because I feel like one thing about emerging tech is like it goes in different flows. So previously it was blockchain, and then like before that was AR VR, and now it's AI again. So like I feel like it just goes in waves. How do you think about the timing when it comes
Yeah.
to investing in something?
Yeah, no, it's a great question, or a series of questions that you asked. So let me start with a little bit of background. I mean,
Mhm.
Grace, you're obviously familiar with GFT, but maybe a little bit of sharing the origin story. So my co-founding partner Jeff and I, we've known each other for over 20 years as part of the corporate venture community.
Mhm.
As you said, I was actually recruited by Samsung to launch and run Samsung Ventures back in the day in 2003.
Mhm.
And my partner Jeff joined NVIDIA as VP of Business Development, covering all M&A investments, strategic partnerships since
Mhm.
2001.
Mhm.
So being part of that community for a long time, we have been friends. We've had co-investments. In fact, it was great to see one of our co-investments, SoundHound AI, which I invested back in 2008, and Jeff joined as a strategic investor alongside with several other strategics a few years after that, to actually have their first CES own booth, working closely with many of the automotive manufacturers as one of the leading conversational AI companies. And that journey of 13 years being on the board and the company finally going public 2+ years ago was just great to see kind of that uh, culmination of all the hard work and effort the founders and the team had put together.
Mhm.
And it was great to see the validation that, investing in that company and having so many strategic investors come in and participate, and eventually, they would only invest, as you can imagine, because SoundHound would be a strategic partner, or they would be a customer to SoundHound's technology. And so, to answer your question about what the lens that GFT Ventures looks at,
Mhm.
um, it looks at it from a customer perspective. So we can talk all day long about how brilliant the technology is, and how differentiated our breakthrough is. Ultimately, in order for it to be successful in the marketplace, it has to be adopted by customers. Now, as we know, in the space of deep tech and frontier tech, many of those technologies are going to be adopted by these big corporate enterprise who are typically the early adopters of innovative cutting edge technology anyway, right? And so, what we try to do is we basically have an opportunity to look at it from, a customer perspective, because we can actually introduce these startups to, our former firms at Samsung or NVIDIA. But the fact that because we've been part of that corporate venture community for over 20 years, a lot of our friends are still there leading global innovation, global corporate venturing at literally every single relevant technology company conglomerate across North America, Europe, and Asia, right? And so the value that we bring to the table is really, we sit down with a startup, understand what they're trying to do. And typically the right stage for us is when that startup has gone through maybe some bootstrapping, a pre-seed round of financing, 6 to 12 months of development, and then they're finally ready to go to market with a prototype, a demo, or sample, something that they can get in front of customers. And what we can do is we can sit down with them, understand what they're doing, and then we can brainstorm who their first potential customers can be, or who the relevant go-to-market partners are. And because they're typically going to be these cutting-edge technology companies, then we can make very warm, educated introductions to our friends. And all we ask for in return is to just give us their unfiltered feedback from a customer perspective. And so that constitutes the majority of our due diligence and gives us market validation, technology validation, product validation. And by the way, we also get to see the team in action to see how they pitch, right, to multiple customers, how they follow up. And we get a very good sense of their execution capabilities. And by adding all of these up and collecting all these data points and then referencing based upon our 20 years of experience, pattern recognition, that's where we try to identify and invest in the right startups that make sense for us.
Totally. I'm just taking notes. I have a few questions there. Like, one thing is, like, I find whenever, let's say, like, you introduce a startup to a potential client, it kind of like it's becoming to be in a black box, as like you don't really know how frequently they follow up with your friend. And even like, unless like everybody is your best friend, like people probably don't tend to just disclose, oh yeah, I'm still in conversation with blah blah blah, or like, blah blah, reach out to me again. Like, I think people won't disclose in details. I think there's like two part of my question. One part is like, how do you kind of like track the process after you introduce so and so to a potential client? And then number two, it's like, let's say if the client did not end up investing or end up like working with that company, like, how do you process as an investor? Do you introduce them to other people, or do you just just stop there and like until they make progress with their product? Because I feel like startups needs tons of iteration. How do you process in these like kind of like ambiguous time?
It's a great question. I think, first of all, I think our bar for engaging with a startup to make those introductions is pretty high, right? Because we're not in a service to basically consult and connect startups and
Everyone.
introduce them to big corporates. We're not a business development organization, right?
Yeah.
So the companies that we will engage in, first of all, typically come from very warm introductions. So because Jeff and I, we've been investing in AI and robotics for over 20 years, typically the best references come from founders that we've backed in the past that are either advising these startups, or one of their VPs or lieutenants that they used to work with are starting new companies, and they want us to take a look at those companies, right? And then typically the high quality founders have already identified specific problems in their particular vertical or marketplace. They've already developed a thesis. And again, they've gone through development to be able to show us how that demo or that prototype will work. And we start with that initial filter, right? It has to be something that, if I was still back at Samsung or my partner Jeff was still at NVIDIA, this would be something interesting enough that we would want to introduce our business units to, right?
Mhm.
And so the bar is really high. In fact, I would say probably if we meet with 100 companies, the number of companies we end up engaging with in this manner is probably less than a handful, right?
Mhm.
And so the bar is high. And then secondly, really understanding who the first 2 or 3 relevant first customer candidates are, or the first go-to-market candidates are, will be in agreement with the startup. And
Mhm.
typically, some of these startups have already started these conversations, right, with folks that we already know. And so it's easy for us to actually ask those folks about what the progress is, what the value proposition resonates with them, and et cetera, et cetera.
Mhm.
And then that gives us more comfort to help the startup get in front of other potential customers as well.
Mhm.
And during that process, it's a very iterative process, right? In a way, it's almost like a matchmaking process.
Mhm.
And so the way you think about it is if you're a matchmaker and you're setting up, friend
Mhm.
A with friend B, you would have to know friend A really well and B really well to make sure that that is a good match. So that's why we spend enough time up front with the startup. And then because we've known the enterprise customers for a long time, that's how we narrow it down. And because we know both sides, there's actually a constant iteration, probably on a weekly basis, when we're doing this due diligence of
Mhm.
understanding where the progress is on both sides so that
Mhm.
we can continue to provide the right level of support. And
Mhm.
look, sometimes it just isn't a fit, right?
Mhm.
And what we ask for in return for making these valuable introductions on both sides is just let us know your unfiltered feedback. And a quick
Mhm.
no, as we all know, is better than a long dragged out maybe, right? So
Mhm.
we've been doing this long enough to know kind of just from the body language, from the speed of responses and whatnot, how quickly and eager this is.
Mhm.
And based upon that, we can make a pretty good determination whether or not what the startup is doing is really of interest to their customers.
Mm. I love that. I feel like another question is like, for example, let's say you back an entrepreneur and then the entrepreneur's mentee or like someone from their company went to uh like create something, right? So I think that's definitely a really interesting way to filter. Like I feel like a lot of every VC basically filter that way. So like, you back someone and then they back someone or like
Yeah.
people in their network. But I think that can lead to a lot of like, it's kind of like the cousins of the original company. So how do you think about like having diversity in the ecosystem? And I feel like another question is like when you first started, like how would you apply the strategy since like, at some point you have to redevelop the network, right? Like or at some point you have to develop the network, not redevelop, but like I guess like actually having that network. At the beginning, I guess how do you build a network that's quality enough for you to actually pull the talents from?
Yeah. So first question around diversity. You're
Mhm.
right. I think there are issues related to kind of being in your own echo chamber, being in your own kind of, limited kind of
Mhm.
network. I mean, the good news is, Jeff and I have been doing this for a long time.
Mhm.
Okay. And because of that, um, and look, we launched GFT Ventures in 2021.
Mhm.
This was before ChatGPT was launched in late 2022. And so the fact that we've actually been investing in AI and data science companies, in my case, 15 years, in Jeff's case, 20 years prior to leading up to that,
Mhm.
gives us some street cred.
Mhm.
And, we already are familiar with the ecosystem. We know a lot of the relevant players there and whatnot. I mean, my partner, Jeff at NVIDIA, he basically created NVIDIA's startup ecosystem, right? Called NVIDIA Inception, where
Mhm.
there's over 10,000 AI startups that are part of that ecosystem. So having that reference point enables us as kind of OGs in the
Mhm.
category to know a lot of people, follow what the technology trends are up front, And in terms of diversity, there's a lot of new entrants that are coming in, excited about AI over the last 2 or 3 years. We all are aware of that. But typically, the best, we believe, quality companies are coming from, again, founders that have already been following the space, that have an understanding of what the issues are. I mean, look, our favorite type of companies we like to back is a founder that have deep domain expertise in a particular vertical or a business function, from agriculture to advertising, or it could be HR to R&D to sales and marketing. And they've already identified a co-founder that has deep technical expertise that can take advantage of the latest and greatest cutting edge coming out of AI and data science. We typically see that in 2 co-founders, sometimes in rare exceptions that resides in a single founder, which is amazing. But those are the types of folks that we like to work with. And what's exciting is these kind of founders are typically diverse from a background, from a gender perspective. There are, as you know, a fair number of female AI entrepreneurs. In fact, my partner Jeff and GFT Ventures, we've been supporting women in AI for the last couple of years, and continue to support that because we see tremendous progress there. I work with a lot of the Asian corporates, and there are, as you know, Grace, a lot of Asian entrepreneurs that have immigrated to the US, have worked for the big tech companies from Google to Meta to Amazon, and now more recently OpenAI, that have gotten the high-level training, know what they're doing, and they're starting their own companies. So in terms of kind of a gender diversity and an ethnicity diversity, I think we already have that covered. And then I guess I'm trying to remember your second question, Grace.
Yeah. So second question is like, how do you establish that network at the very beginning?
Oh, right. Well, as I said earlier, I think already covered that, but
Yeah, it's like kind of the you have worked at certain companies that kind of like
yeah,
built
you're
the
naturally early in those categories, right? So, while Jeff had been very, very deep in AI and data science, my role at Samsung was to basically keep track of all the new emerging technology waves, right? So you said it. When I joined Samsung in 2003, this was the beginning of the mobile wave, right? And with so much data being generated from smart devices, right, the next wave was big data. And the infrastructure innovation needed to process all of that happened with cloud infrastructure, right? And then once you had the infrastructure, once you had the data, then naturally artificial intelligence became relevant, right? Because you can extract the implications out of the data, and you already had the infrastructure to process that. So then big data. And then, wave after wave, you mentioned AR, VR, and then leading up to blockchain, were all categories that all these leading technology companies, from Samsung to all the conglomerates that I used to work with at TransLink, were very interested in, right? And so my role was to be ahead of that curve, to basically do my homework and do my research, but also meet as many entrepreneurs that were starting companies in these new emerging categories, to understand the trends and typically place a bet on who I considered could be a winner in that category, right? And so that's how this process emerged, where, there's a reason that we call ourselves GFT Ventures, Global Frontier Technology Ventures. We're not Global AI Ventures, because while we believe that AI is going to be the biggest disruption in our lifetimes, and there's still, we're still in the very early innings, there's going to be continuous waves of new technology, and we want to be on that cutting edge. You asked me the question about timing. How do you measure the right timing to go into an investment? Well, honestly, the best timing is driven by 2 factors. If you see the highest quality entrepreneurs starting companies in this new category, that drives somebody like myself or my partner Jeff to pay attention to that category. And then number 2, what drives the ultimate timing of what we believe is the best time of investment is when the customers are ready, when they actually want the new technology and the new product, and they're very eager to adopt. The challenge is, if you're too early and you're spending all of your time and energy to educate potential customers about how great something is, then that's very, very challenging, because a lot of these big companies like Samsung and others, they're already working on hundreds of thousands of different things at the same time. And so getting their attention is very difficult. But when they're ready to adopt and work with a startup, then things can move very, very quickly. So we're waiting, based upon our 20 years of pattern recognition, for that right timing to invest.
Mm. I wonder, so like when you were thinking about um the AI and data space, so as you mentioned, like your partner worked at NVIDIA and then you work at Samsung, and previously you also co-founded a different firm before. And I wonder, based on your current observation, what are three trends that you're seeing that's really exciting? Obviously, like, I feel like under AI, there is a lot of different categories of things. So like many people say it's AI agent or like infrastructure and everything else. What would you say are three things that you find most interesting?
Yeah, no, I think it's a great question, and it's a very appropriate question,
Hmm.
as we're very early in the new year, 2025.
Hmm.
Let's talk about AI. I think we're all well aware of the major kind of buzzwords and themes in AI. You mentioned agentic AI.
Hmm.
There is a lot of excitement about enterprise integration. There's a lot of conversations that have been ongoing since the last year or so on sovereign AI. There's a long list of things.
Hmm.
Um, what I'm observing, frankly, is because AI is now becoming more and more ubiquitous,
Hmm.
it's very difficult to find new startups that have enough differentiation, in my opinion,
Hmm.
have, you know, um, to get too excited about. And what I mean by that is, if you think about the right environment for a startup to succeed, you need to have enough differentiation and enough room to grow.
Hmm.
And the customer engagements have to be relatively quick in terms of sales cycles, right?
Hmm.
And the reality is, what's going on, if you talk to any enterprise customer nowadays, they are being already approached by more than a dozen different startups that
Hmm.
have a solution for that domain. So let's say if you're a law firm, right? There's several legal AI companies, some of the more established ones like
Hmm.
Harvey and what other, but there's different startups that are approaching you on a daily basis, right?
Hmm.
And then on top of that, you have your traditional SaaS vendors and technology partners that now have an AI solution, right? And so
Hmm.
you're starting an evaluation because you know that you want to adopt AI in some form or fashion. The value proposition makes sense.
Hmm.
But in the middle of this evaluation, because you want to choose the right partner, another half a dozen companies show up. And what that leads to is basically it's evaluation paralysis, right? You're basically constantly evaluating, but it's very difficult to make that decision because you're also worried about, what if the best partner shows up, tomorrow, or in 3 months from now, or 6 months from now.
Hmm.
And so if you're a startup trying to sell into these, big enterprise customers, the sales cycles are getting longer and longer and longer. And so that early lift you need to kind of get the traction as a startup, it's
Hmm.
getting very difficult to find out. So first point about AI, I think, is it's getting really, really hard to invest in differentiated, especially AI application companies today.
Hmm.
I would say that is number one.
Hmm.
Number two is, we talked about not only AI and data science, but at GFT Ventures, we look at applications of AI and data science that naturally include robotics and digital health,
Hmm.
right? And, you know, robotics, digital health have been around for a long time. I've been
Hmm.
following the category since my days at Samsung for over 20 years. At TransLink, some of our investors included Foxconn, the largest customer of robotics, as well as Hyundai Motors and other auto companies that acquired robotics companies like Boston Dynamics and whatnot.
Hmm.
So looking at the category, I've spent a lot of time, and it's been really, really hard. Anybody that has been investing in robotics knows that
Mhm.
there has been a lot of challenges and, quite frankly, a lot of dead bodies along the way.
Mhm.
And one of the main reasons for that is the traditional AI startup. You typically will have to raise $5 to $10 million to build a prototype,
Mhm.
right? And then you'll probably have to raise another 5 to 10 million to go to market, because it takes time to convince a
Mhm.
customer to try to sign up for a trial. And then once you find your 2 or 3 pilot customers,
Mhm.
that is where the valley of death happens, because at that point, once you've built the prototype, once you've
Mhm.
plugged in your pilot customer sites,
Mhm.
that's when you're finally gathering data to improve your robotic solution. And that will take time, 6 months, 12 months, 18 months, 24 months.
Mhm.
And you're not generating as much revenue because your solution isn't perfect, right? You're still training, you're gathering data. And that is where the valley of death for a lot of robotic startups happens, right?
Mhm.
And so what I am seeing today is a lot of the robotics entrepreneurs. And by the way, last year, out of the latest 4 investments we did last year, 3 of them were robotics companies. Okay.
Mhm.
The reason for that is the entrepreneurs, the robotics entrepreneurs today understand how
Mhm.
important that data is. Not only are they leveraging, on back-end LLMs to make their robotics smarter,
Mhm.
but they understand training data is really important. And so instead of trying to capture training data after you've spent the $10, $20 million building the prototype and plugged in, finding innovative ways to get the training data even before they build the robot, right? And by doing that, they can become much more efficient, much more smarter, and the customer engagements become much more accelerated because you've already captured the data and have built a custom solution that actually works and solves the problems that those customers want. And so we're really excited about the robotics category because the emergence of these trends of understanding that data capture is really important and being able to do that up front is one thing.
Mhm.
And while there are, very big startups with massive funding rounds that are going after humanoid robotics. Um, I'm a believer in humanoid robotics, but it's more of a long-term thing. Think about how long it took for autonomous driving to become commercialized.
Mhm.
In the last year and two, Waymo has really shown the public that this driverless technology, autonomous driving, works. But that project was started over a decade ago, right?
Mhm.
And so if you think about trying to make the human robotics work, it's going to take much longer than most people think. And personally, for me, while there's going to be obviously some successful humanoid projects, there's still
Mhm.
plenty of opportunities for single purpose application robots that are specialized in doing that one thing really, really, really well, almost like an appliance. And
Mhm.
because they've gathered the data ahead of time and trained it the right way, it'll work almost like an appliance, right? Think
Mhm.
about the fact that we don't think whether or not this is going to work if you press the coffee machine button
Mhm.
or your dishwasher machine or your laundry machine. That is the level of where robotics has to be commercially successful.
Mhm.
And that's where we think there's going to be some very, very interesting startups. Some of them we've already backed. And we're looking forward to investing in several others going forward this year and next year as well.
I have so many questions there. Like, as a angel investor, I also invest in a robotics company. I think there is, I guess, like also multiple questions there. I want to keep it short, but also I want to shout out to the audience. Hi, Alice. Hi, Lakashita. Hi, this NFT company from Twitter. Hi, Tawama. Okay, so I wanted to quickly shout out to our audience. Okay, so when you are thinking about, you mentioned about like specialize in one thing really well, right? What should this one thing be? So, like for example, should they target like the general consumer? Like, so for example, I feel like the first adopter of like a coffee machine is maybe like not a coffee lover. I feel like it could be just like a, busy person somewhere, but like I guess like how would you go about like identifying their potential clients? Since you guys come from like corporate venture background, my first thought would be like, okay, would like, Samsung or Nvidia just buy this company? Like that's like a way to think about the exit. So I guess my question is like, how do you think about exit and the go-to-market strategy for these companies?
Okay, well, so let me start by mentioning kind of what the category of interest would be, right?
Yeah.
So you mentioned earlier, the cleaning robots, the Roombas.
Mm-hmm.
And if you think about it, the Roombas were actually launched over 20 years ago, I believe in 2003. Okay. And the fact that even after 20 years and all the technology advancements, the best selling consumer facing service robot, even today, is the Roomba. It's the cleaning robots. Now, obviously, all the major consumer electronics companies and several companies out of China have flooded the market with various different Roomba type solutions.
Mhm.
But that is still the leading category out there. And the
Right.
reason for their success, if you think about it, is this. The Roomba does something that humans hate to do. Who
Mhm.
wants to do cleaning, right? The same way
Mhm.
that dishwashing and whatnot, laundry, etc., right?
Mhm.
So if you can automate something that people hate doing, that's usually a good thing.
Mhm.
But you also have to make it work reliably, and it has to be at a price point that makes sense, right? So for the consumer-facing category, which again, as I mentioned earlier, it's more like an appliance.
Mhm.
If you think about the competition and the margins in the consumer appliance category, they're not super attractive,
Mhm.
right? And so while there will be robots that are consumer facing in the home, in hospitality at hotels, in restaurants, even in hospitals,
Mhm.
that category is a challenging category just because at the end of the day, all of these things, these robots, while they make it more efficient, and there's certainly a wow factor, is human labor replacement, which means that you're capped at how much you would pay a human on a per diem or a salary basis. So
Mhm.
you have to make this work perfectly,
Mhm.
but you can't charge more than, in the case of the cleaning robot, $500, right? So that's a tight business opportunity that typically doesn't give you a lot of margin to play with, and thus, from a market cap perspective, the multiples are going to be limited.
Mhm.
What I'm personally more excited about, there's certain categories that are less of a inconvenience, but
Mhm.
something that could be very dangerous, right?
Mhm.
It could be very demanding. It could be very dirty. These kind of categories, and sometimes demeaning.
Mhm.
These kind of what's called 3D
Mhm.
categories are categories that, because people hate doing them, you can't pay people enough to do certain things, right? And so for me, what's exciting when you think about applications, there's been well-documented defense applications. We all know
Mhm.
right now in the Ukrainian war how effective killer drones have been, right?
Mhm.
And think about what killer drones do, right? People don't have to now actually go through enemy lines to actually engage war. You just fly in a drone, right?
Mhm.
And at the same token, there's a lot of safety, bomb diffusion, landmine diffusion, and whatnot. And these kind of applications, people will pay a lot of money for, right? Now, are those going to be like mass market adoption? Probably not.
Mhm.
So for me personally, while there's defense applications, I'm more excited about the bridge between, let's say, manufacturing, where if you go into a modern manufacturing facility, it's almost 100% automated, right? And you take that product that's manufactured, let's say from a Foxconn, factory that manufactures iPhones, where a lot of automation has already happened,
Mhm.
taking that to the home, in between the iPhone, after it's packaged, right, has to be delivered. And so logistics to me is actually a very interesting area because it's heavy duty. The working environment isn't great. Sometimes in the summer, in containers, when you're loading and offloading, the temperatures can reach up to 120 degrees. It's freezing. It's backbreaking work. If there was a way
Mhm.
to automate those warehouse and logistic opportunities, which, by
Mhm.
the way, Amazon has already started to do for many, many years.
Mhm.
But to be able to bring that to everybody else, to me, is a very exciting category, for example, right? So that's
Mm.
one example of a category that it's kind of bridging the fully automated manufacturing facility to the less automated home. How do you get your product from A to B? And it's all about logistics and warehousing. And that is where I think there could be a lot of value creation in automation and robotics.
Mm. I thought it was really interesting just because I think like we touch upon like multiple different things. One thing is about the consumer robotics market, which is like you mentioned, the Roomba or like coffee machine, or even the wearables. Technically, I feel like they're all consumer driven. And then in the end, we mentioned about like, the automated manufacturer, and then in the middle part, you mentioned about the drones, right? I feel like those are three different things. One is consumer, one is like the business use case slash the customer is like DOJ or something like, and then the third part is I guess like the manufacturer that's associated with producing these robotics arms and robotics companies, right? So those are like three different things. From like a profitability standpoint, I wonder how do you think through the risk each category will take? Because I personally don't touch anything consumer robotics just because my belief is I can't predict what's gonna be hot just because when I moved to Silicon Valley, the first consumer robotics company I've encountered was the wearable watch that doesn't exist anymore. It was a YC company. It
Mhm.
was I don't want to name names, but like it was like a very
Know which company you're
popular.
talking about. Yeah.
Yeah, it's a popular company, and obviously people think it's like Apple Watch killer, yada yada yada. It doesn't exist anymore. And then last year we seen these like the AI pin, the little like rabbit little thing. But like this year, like I feel like we don't hear about them that much. And then in the middle, they're so like basically consumer. I personally feel like it's super tough investment category. Don't know what's your thought there. In the middle part, it's like if you
Uh,
only have one single client to the government, like that's also another big problem, right? Like, if you can't sell to the government, you're killing drones. Like, I don't really know if there's a market or like maybe there is a market for that, but I'm just not very familiar with. I don't want to bet on that. But and then there's a third pillar, which is like, you mentioned about like the automated um I guess like infrastructure industrial companies. I've
yeah.
heard investors that invest in like they expect everything to be automated. So like basically when you go into a factory, how do people think about the category or rethink about like how something is manufactured? But they're also running $1 billion fund. So like I feel like they have a lot more leverage that they could just place a bet into everything. And then if some basically just depend on something will work out. But I wonder like as a person running a fund, how do you think about these different subcategories of robotics and how do you kind of mitigate risk? I don't know if you mitigate risk because it's venture
Yeah,
capital.
no, I think it's a fair question. So first of all, I think there's, yeah, broadly speaking, two categories. One is kind of the enabling technology in robotics, right? So
Right.
that could be from sensor technology, from
Mhm.
programming platforms, yeah, data generation platforms and whatnot. And those are really, really important foundational technologies, right? And we still look at those and I think there's been a lot of excitement around, especially, physical AI as a category, as Jensen
Mhm.
Huang mentioned during his CES keynote, and what's happening around, synthetic data generation
Mhm.
to enable, these robotics to become smarter and more intelligent. So that's one category, and that's a category that we spend a lot of time on. Now,
Mhm.
what you were talking about is the various different applications, right? How does this apply? And again, my rule of thumb is if the barrier to entry is too low and it
Mhm.
flooded with multiple companies, then again, it's just not an attractive business because your margins are always going to be squeezed, right?
Mhm.
And the amount of patent protection in the area is going to be limited. So what?
Oh, I have another question. So can you really sell a patent to like so for example, will people actually acquire your company because you have a XYZ patent? Like, is this normally happening? I'm not
Honestly,
saying
I
it's
think
not
it
it.
happens very rarely.
Got it. Okay.
Yeah, no, I think it happens if, a big company has to deal with another big company legal challenge,
Mhm.
a lawsuit. And
Oh,
by
okay.
acquiring a startups company, they actually have a better defense against those categories. Most companies, I think large companies, will never necessarily acquire a startup just for their IP per se.
Oh, okay.
Because the challenge is, if that company was selling their IP, it means that they haven't been successful in their go-to-market. And so from a big company perspective, why would you want to acquire the IP that hasn't been successfully proven in the market unless
Mm,
it had value as IP alone? And the typical biggest value for IP alone is, to counter against legal challenges that they're facing.
mm. Oh, okay. It's all about business. I see.
Yeah, I
But
know.
keep going. Sorry about that.
No, 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 no,
Yeah.
no, no, no question. No, 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 no problem at all. I was just going to say, in terms of these different categories, you want to actually focus on areas, in my opinion, that have a large enough market, but not everybody is familiar with, right?
Mm,
So that's why, it could be, there's a lot of excitement around agricultural robots. We all know
mhm,
that and theoretically, that could be a massive market opportunity. But
mhm,
how many technologists in Silicon Valley are familiar with, how the harvest season is done
mhm,
in different farms and agricultural complexes and whatnot? Not many. But once in a while, you'll come across an entrepreneur that has that familiarity. The same thing as I mentioned with warehousing and logistics. Somebody that's worked in that industry knows what the pain points are, knows how to go about solving the problem with the right technology. Those are the right
mhm,
entrepreneurs, in my opinion, to back. And then broadly in the consumer category as well, as I said, while in the home, everybody can think about how convenient would be to have a cleaning robot or a laundry folding robot, or a fetch robot that can bring me the newspaper or bring my coffee. All of those categories are great, but again, there's going to be a lot of competition. But
mhm,
what about, particular verticals that are consumer facing, like in a hospital environment? Not necessarily everybody is familiar with how the internal operations of a hospital works out and how automation can be adopted aggressively. We have a portfolio company that's starting from the beginning because there's a lack of efficiency and a lack of technology adoption in most of the hospitals in the US today. That's why we have massive healthcare costs, because there's a lack of efficiency. You can start with very basic things by utilizing computer vision technology, set up the right cameras, and have it monitored so that, for example, your most valuable assets in a hospital, like operating rooms and patient rooms, are actually utilized at full capacity. There's just some basic things can be done, but unless you are familiar with that industry and you have depth there, you
mhm.
won't be able to understand it. And for us, we prefer those kind of opportunities than more generic opportunities.
Mm. I wonder, so like when you're thinking about, so for example, patient rooms or like any sub specific domain, um, category of robotics companies, I think one thing is like, how do you vet the so I think there's also another part of the question is like, I think at the beginning maybe they're building one, let's say like a robotic arm for XYZ in the hospital, but which part should they build first? Like should they build the most, I feel like should they build the most, like thinking from the robots that cleans the floor, or like thinking about something that's like people don't wanna do and then built that, but, like, I wonder, is there something, so there's, like, 2 part, like, one part is, like, how do you verify if the hospital is gonna buy certain things? They could be your design partners, they could, like, pay a small trial in somewhere, but on the other hand, like, how do you get the signal that this is gonna be something, like, um implement into various different hospitals? And this is like also like I feel like Silicon Valley has a higher risk tolerance. Like, the hospital here may be interested in having a test run, but like when you're thinking about selling things at a scale, like how do you kind of verify the thesis there? And then the other part is like what like most robotics companies are gonna cost $1 million to even produce. What's a healthy profit margin there for you to feel comfortable to invest?
Yeah, a lot of good questions there. So first of all, going back to what I said earlier,
Mhm,
you won't be able to convince hospitals to even talk to you unless you have the right credentials and background,
mhm,
right?
mhm,
So the company I mentioned, which is called Artisight,
mhm,
founder CEO is a former MD, right? So he's a doctor that worked in the hospital environment. He knows firsthand what some of these pain points are, and he has relationships with hospital management to
mhm,
be able to talk the same language, and they both know what the problems are, and he can actually develop a solution that addresses those problems. So I think the background of the founder is critical in these cases, right? And so starting with the right background, I think, is important. You mentioned the second question around, how should they go about building? Well, ideally, if you don't have to build anything, that's even better. A lot of the existing hardware, for example, robotics arms, why build a
mhm,
robotics arm? There's plenty of well-established commercial robotics arm companies out there in the market today.
mhm,
What you are trying to do is make sure that it is programmed and trained in the right way to basically execute on the specific task you want it to do, right?
mhm,
So for me, I'm not impressed by, startups that will basically build the entire robot from scratch. That doesn't make any sense to me.
mhm,
You would want to utilize as much off-the-shelf components as possible, but build a solution that your
mhm.
customers want. I think that's really, really important.
Um, I totally agree. I think the other question is like for the profit margin, I think like obviously you can buy, but like let's say you buy like a secondhand robots just to practice on your thing, that even costs 40K,
Yeah.
something like that. But how do you think about like and then if you're selling your thing 50K, it's like, it's not going to be super profitable. I mean, maybe it will, but like how do you think about like the financial component, not financial component, but like how do you think about the go to market or the just like the unit economics in
Yeah,
this?
let's talk about that. Unit economics is probably the most important thing in the robotics
Mhm,
business, and certainly one of the most important things that I evaluate when I look at a robotic startups. Now,
mhm,
again, if you think about robotics as a
mhm,
business overall and compare that versus, hardware appliance business and a fully, software business, it's
mhm,
always going to be somewhere in between, right? The margins are always going to be not as good as software, but it should be better than a hardware only appliance business, okay?
mhm,
Because it's a smarter, intelligent machine. Now, what that means is that you have your challenges to begin with. But even within the robotics business, again, some of the enabling technology, which sometimes
mhm,
can be completely software driven, you will have those software margins. The key
mhm,
thing to understand when you think about unit economics is, your next best alternative cost. The cost of human labor replacement we talked about,
mhm,
and because humans are, pretty versatile,
mhm,
no customer is going to pay you more than what they would pay a human, because a human, while they can mop up the floor, right? If a disaster happens, and serve the customers at the tables, and they
mhm,
can also manage a cashier, robots can't do that typically. You're only good at doing one thing. So you need to understand where you're capped at in terms of, and thus, in order for these margins to work, you need to
mhm,
go backwards from what your maximum level of revenue generation, if you're a robotics per service, what
mhm,
that would be on a monthly basis, annual basis, right?
mhm,
And be able to build a solution that, with plenty of distribution margin, right? Because you have to pay your partners to sell and whatnot, service margin, your manufacturing costs have to kind of fit in that range. And if it doesn't, then it's kind of a non-starter. And time and time again, I've seen cases where people underestimate the
mhm,
actual cost of doing business, or underestimate the total cost of ownership from a customer perspective. Because a customer also is not only buying your robotic solution, but
mhm,
maybe they need to allocate extra space for the robots to charge, right? Maybe
mhm,
they have to have somebody that manages those robots, to make sure the maintenance and whatnot and service calls. All of that has to be included in the unit economics conversation.
Mm.
The entire fully loaded total cost of ownership has to make sense for this solution to be adopted.
Mm. I think that's super important to think about. And I don't want to waste too much of your time since like I feel like I want to be mindful of the time. Maybe we could wrap up with like a quick 1 minute fire round here. What's your favorite book?
Oh, there's so many favorite books. My favorite book, my favorite book of all time. I'm a big sci-fi fan, and Stephen King is one of my favorite authors.
Mhm.
It's not a single book, but the entire series of 7 books of The Dark Tower by Stephen King is probably one of the best book series that I've ever read.
Who made the biggest impact in your career?
Oh, there's a lot of folks that have made a huge impact in my career, but I will tell you, I was originally a chemistry major in undergrad, and I did a biochem grad degree. And while I was in the lab after a semester, when I was having doubts whether or not my lifelong dream of becoming a research scientist was actually a right fit for my personality, there was a PhD candidate that I worked with in the lab that had been there for several years. And he pulled me aside one day while we were having coffee, and he told me, like, Jay, maybe you're not cut out to do this, and don't be afraid of cutting it loose. Just because you've started your degree program, it doesn't mean that you have to finish it. And what that enabled me to do is just finish my 2-year master degree instead of going off on a 5-year PhD program. And then I switched over to business, and I ended up doing what I'm doing today, which I think is a much better fit.
Amazing. Who would you invite to your dinner party?
Is this somebody is alive, or it could be somebody from history? What do you
It's
think?
your party.
It's my party. Okay. So I'm a Catholic. I'd love to be able to invite Jesus. I know that's very cliche, but that would be great. In fact, if I had my way, I'd love to invite Buddha, Mohammed, and kind of have a very interesting conversation around that.
Wow, that's a crew. Where can we find you outside of work?
Outside of work, I play a fair amount of golf. I wish my golf game could reflect the fact that I play a fair amount of golf. But if I'm not traveling, if I'm not on a plane, then on a weekend, I'll be on the golf course.
Would you play like robotic golf? Will that happen one day?
Oh, you know what I should do is I should probably get lessons from Robotics Golfer. They actually have robots that actually can demonstrate the perfect swing.
Oh wow.
And so maybe I should take lessons from that.
Wow, that's all cool. But anyway, Jay, thank you so much for coming on the show. It was such a masterclass for robotics stuff.
I appreciate it. This was so much fun, Grace. Thank you so much for inviting me.
Let me quickly